What's up, everyone? All right, we've got a lot to cover today. This is going to be my game plan for the week ahead and my watch list for Monday morning. Now, just yesterday, I uploaded an episode of my 3 bear market trading strategies. One for long-term investing, one for swing trading, and one for day trading. If you haven't already checked that out, I'll put a link at the end of this episode so you can watch it. Today, I'm going to give you my day trading watch list. Right now, well, the S&P 500 is down 17% off the all-time highs. So we are in a correction and we are darn near close to going into a bear market. The typical correction lasts 4 months before the market recovers back to the high. The typical bear market takes 9 months. So we may well be in for a bear market here, but I don't want you to think that's going to stop me from showing up every day and probably making some good money. I've traded through a number of corrections and bear markets, and I have pulled profit out of all of them. So my approach on Friday, as you know, the market was down big. It was one of the worst days in the market in 5 years. And I finished up over $20,000 thanks to AREB. And I saw some of you guys absolutely crushed this on Friday. I stopped trading it. I made $23,000 right there. And then I had to go. I had something I had to get done. And so I was out for the rest of the day. And this thing, although it sold off to 4, ended up rallying all the way up here to 12, pulling back up to 14, up to 16, all the way up to $20 a share. This probably gave some of you guys a little bit of indigestion. This is not good. 3 halts down and then a rally all the way back up. I don't know what to say about that. That's pretty intense. The front side felt pretty clean. Looks like that move was pretty clean. And this is a stock that literally went up over 400% on Friday, while the overall market was having its worst day in half a decade. Wow. Okay. Now, the biggest loser on Friday was a stock that went down 32%, right over here, SONM. So let's just kind of put this in context. SONM went down 32%. Did people trade it? Did a ton of people short it? Let's make a ton of money on this stock dropping. Only had 2 million shares of volume. The second biggest loser, 31%, only 1.5 million shares of volume. In fact, none of these had more than 10 million shares of volume. And yet, these big gainers, 80 million shares, 115, 10 million, 90 million. This is a lot of volume. So naturally, you can make more money on a stock that goes up 400% than you can on a stock that drops 30%. Going up times 4 is a lot more than going down, 1/3. So even if a stock goes down 90% in one day, you'd still have more potential to make money on a stock going up 3 times or 4 times, 400% than on that drop. So combined with difficulty borrowing shares, not having access to leverage and margin when you're shorting, not being able to short in a margin account, in a cash account, it just makes it so more people focus on trading to the long side, which of course, as you know, is my go-to strategy, even in a bear market. And I don't want you to think that in a bear market, you won't see some of these moves because my goodness, we certainly saw one just yesterday or just Friday. So AREB, that was by far the biggest gainer. And so my thought here going into the week ahead is that we should continue to look for these types of stocks. So on Friday, when we first sat down, there wasn't a lot that looked good. There were a couple of lower price stocks, a couple penny stocks that were up a bit. They weren't that exciting. They were basically moving sideways. And I'm going to tell you right now, if something is moving sideways, I don't want to touch it. So moving within a 15, 20 cent range here, that's not going to do it for me. I need something that has the potential to squeeze. Now, SOBR, this one popped up a little bit. You can see that, but very light volume. And then it retraced. Lighter volume stocks are tricky. Higher volume is certainly going to be easier. And so, that was private placement news. But a private placement caused that drop. See, now that's a little bit different, though, because it's not exactly the same as an offering. How is a private placement different from an offering? We'll just go on a little tangent here. So a private placement is when the company has arranged a purchase of stock in exchange for money with an institution. And typically that institution has to vet the company fairly carefully to decide whether or not it's worth investing in. A secondary offering, those shares can be sold right onto the market to retail traders who may not know very much about the company at all. So private placement is a little bit more of a vote of confidence because this company felt comfortable giving them, $2.5 million up front and approximately $8.5 million in potential proceeds. So that's a significant amount of money. But it looks like the price was fairly low indeed. $3.45, $2.95. So I can see why it dropped. HC Wainwright, they do a lot of these small cap offerings and private placements. But then it rallied back up, which is honestly a bit of a surprise. So that is interesting. But nonetheless, when this stock first started to squeeze, what I knew about it was that this is a stock that made a really big move just earlier in the week. And so I think that context is really important because it's like early in the week when this popped up, I think traders were kind of not sure about it. It had lighter volume. It halted up once, then it kind of pushed higher and then dipped and ripped. So that was kind of the best setup right there where a lot of volume came in. But I think people just weren't sure about it. But now you've got a stock that has a history going up 400% in one day. So then Friday ended up actually being what? The first daily candle to make a new high. And that was right there as it broke over the high here of like 550. So you got your first daily candle to make a new high, which became essentially a daily bull flag resolving. So former momentum stocks can be very powerful. And I actually scan specifically for former momentum stocks. So what this scanner is doing is it's actually looking for stocks that have a history of making big moves, and it actually lowers some of my filter thresholds because on a stock that has a history of making big moves, when it first starts like popping up, I want to pay extra close attention to it because I know this is a stock in the history that, you know, has done exceptional things. A stock that is popping up on light volume that doesn't have that same history, I may not want to take the risk and jump in it. So AREB, I saw it early, jumped on, and we got a great trade on that one. And I hope some of you guys did quite well on it as the day went on. But when it comes to Monday morning, you know, I guess I have to say that right now, if we look at our top gainers after hours, so after hours top gainers right here. So let's see. There we go. After hours top gainers, BJDX, I'm going to put this on the link. There we go. Look at the color. Moved up a bit, lighter volume, lower float, diagnostics company. It could work as continuation into Monday. It could. I'll put it on a side chart. But I would also keep AREB on a side chart because the fact is they now have the offering news through the private placement out. So that thing that you would worry about coming out has come out and it's still holding up. So this might give us, I don't know if it'll do it at 4 a.m. because it is down a bit off the highs, but it might give us another daily pullback and then go up again, another daily bull flag. That could work. But I'm going to keep it on watch because I think there's more potential on that. So, you know, this is kind of my process of putting together the watch list. So AREB, and then we've got a BJDX. So those are two that are going to be on the watch list for Monday. And then I'm going to switch over to my continuation scanner. On the continuation scanner, I can see stocks that have recently made big moves. So I'm going to close this one. So ICCT, this one made another move on Friday. And it came right up to that 200 moving average, but it's at $7. So can this hold over the 200? Well, I don't know. It's been a little tricky. I've actually seen a number of traders that have struggled on this one. It sort of breaks resistance, then goes back below it. So I would put it on the kind of like ICCT. This will be like side chart. I mean, I guess these are all kind of like maybes at the end of the day, but this was especially a maybe, ICCT. Then we've got AREB, already talked about that. ALMS, 19 million share float, but a somewhat recent chart. So over 14 could be interesting. Even though the float's higher, recent IPOs like this can work. So that's a possibility. TIVC, we're gonna have to zoom in on this one's 200 moving average. Okay, so back over 6. I do like that one as well. So TIVC over 6, ALMS. It's a hard maybe. I don't think it's gonna work because of the float, but it could, so it's a possibility. CGTL, this one, somewhat recent to the market as well, but I don't like how it seems like it trades on no volume. I'll put it on side chart. CGTL. And then Monday morning when I come sit down, I'll just have this right in front of me, so it'll be very easy to be like, oh, that's the one I wanted to take a peek at. And then these ones are not as interesting. So so that gives us a couple stocks to watch. Oh, and then let's just check Ford. This is not Ford Motor Company. It's Forward Industries. I don't know how. Anyways, but it needs a catalyst. It's up a bit though, so I would say forward if it has news. What I like about it is that it's on the scanner here, up 39%, light volume, low float, kind of moving higher. So maybe. And then SOBR, no, I don't think that's going to work. Now, the overall market gapping down, of course, or selling off on Friday. I'm expecting a gap over the weekend. And so at this point, we've got the headwind of the overall market, but it's not stopping volume from coming into small cap names that are bucking the trend of the overall market. So that's good. I would be very cautious not to get into the habit of trying to day trade anything and everything that's moving. Netflix, Apple, Tesla, whatever. These are all volatile. They're all moving, but they're moving with the market more or less. So yes, if the market bounces, you could buy the S&P 500. You could short UVIX or UVXY, which is the VIX. So if the market starts popping, the VIX will start dropping. This went from $22 to $40 in 2 days, 100%. UVIX went up 100% as well. So if the market pops in a big way, this will drop 10 points. So that's worth keeping an eye on. You could also go long SVIX when the market bounces. This is a short on the VIX. So when the VIX drops, this will go up. So this could go up a couple dollars a share if you get a big bounce in the market, which would really probably only happen in like a big way if there was economic news, tariff news that came out during the trading session. Otherwise, it would just be sort of a slow grind if the market starts to recover. So you do have some plays on the overall market. And yeah, the market's bouncing. You could buy options on the S&P 500, calls. You could also just buy NVIDIA or buy Tesla because these are very liquid. And for every dollar a share the market goes up, this will go up that plus more because it's more volatile. So I think that there's some consideration there, but I also think that generally speaking, you can find yourself very quickly getting into a sticky situation because you're mismanaging risk, and it can be really bad. So be very careful testing the water on some of these higher priced stocks if it's not your go-to strategy. The bear market strategies, for the most part, are to focus on the outlier stocks that are making a big move. That's where I find success. And, not to try to trade everything, just to wait for those few big moves each day. And each day we continue to see them. So I think what happens to a lot of traders is they get caught into chasing everything, and then they end up with big losses, and then the FOMO kicks in, and they're trying to recover the losses, and it becomes a spiral. So I don't want to see that happen to you. So I would really focus on asking yourself what is obvious and remembering, you don't have to optimize a strategy for how you're going to trade the S&P 500 on its worst day in 5 years. Only every 5 years it has its worst day in 5 years, right? That's not something that's happening every day. So even if you didn't trade at all on that day, that would be okay, right? These are outlier days. And we may have a couple more outlier days in the near future. It wouldn't surprise me at all. So it's something to be aware of. But rather than trying to trade, the S&P 500, I'm just going to focus on the stocks each day that are moving, ideally with a clear catalyst, or have just the right daily chart, the right combination of float, and that are obvious for one reason or another. Now, for those of you guys that didn't watch my full-length episode on the 3 strategies for trading a bear market, I'll put the link right here. I'll put the link to how to start day trading in 2025 right here for those of you guys who are new, and a link to my ultimate technical analysis guide of how to read candlestick charts right there. Those are 3 episodes I think you guys will enjoy. And by the way, our anniversary sale at Warrior Trading, celebrating 13 years since I created this blog, which has now grown to everything it is today, will end those sales on Tuesday. So the timer is set. You've got basically 2 days. All right, so just putting that out there. And thank you guys as always for tuning in. If you enjoyed this episode, I hope you hit the thumbs up. I hope you subscribe to the channel. And I'll remind you as always, trading is risky. My results aren't typical, so please manage your risk, take it slow. And I will be streaming bright and early Monday morning, 7 a.m. for members at Warrior Trading.